Well, welcome everyone to the AEDC Voice webinar, a monthly program that brings you key figures in business and investments to discuss important initiatives, programs, investments, and other important information that gives you insights into the trends and issues affecting the Anchorage and Alaska economy. Our thanks to the great sponsors who make today's program possible, Alaska Executive Search and Bradison Management Group. Thank you so much to these two great supporters of AEDC. So today, AEDC Voice highlights Barings. Well, what is Barings? Barings is a global asset management firm with over $326 billion of assets under management as of March 31st, 2021, across all major asset classes. Over its 28-year track record, the Barings FCI team has established custom, outcome-oriented solutions through differentiated portfolio construction, access to constrained markets, and adaptability to changing markets and client priorities. Now, as part of its mandate, Barings FCI manages the Alaska Future Fund, otherwise known as Future Fund, which is a $100 million program that invests in businesses and projects that support core sectors of the Alaska economy, including but not limited to natural resources, transportation, and infrastructure, to grow the Alaska economy and foster the next generation of private market opportunities in the state of Alaska. The Future Fund will prioritize opportunities to invest directly in markets, private market sponsor funds, or alongside private market sponsors in companies with headquarters, operations, or a bona fide plan to operate in Alaska. Now, today's webinar topic will be that Barings will provide an overview and discuss key objections and target investment areas for its Alaska in-state program, the Alaska Future Fund, or AFF, in addition to providing a domestic macro summary overview. Barings will be joined by Rick Van Nieuwenhuyse. I always been very careful to pronounce that correctly, Rick, because I don't want to mess that up. Rick is president and CEO of Contango ORE, Incorporated, a recent AFF investment to provide an overview of the metals and mining industry in Alaska and how Contango ORE is positioned for success. Our other speakers will be Mr. Alan Ruiz, Managing Director of Barings. Mr. Ruiz is part of the funds and co-investments team and is responsible for originating, underwriting, and monitoring funds and co-investments. Joining Mr. Ruiz is Patrick O'Hara, Managing Director, Barings. Mr. O'Hara is a member of the Barings Fund and Co-Investment team and is responsible for originating, underwriting, and monitoring primary fund, co-investment, and secondary fund opportunities for private equity and real assets. And Rick Van Nieuwenhuyse, Rick, I did it, I messed it up, President and CEO of Contango ORE, has more than 40 years of experience in the natural resource sector. Before joining Contango ORE, he was president and chief executive officer of Trilogy Metals, who are currently developing the high-grade Upper Kobuk mineral projects located in the Ambler Mining District of Alaska. Following today's presentation, we'll get into Q&A, so please remember to use the Q&A line to post your questions. You can also chat if you just want to talk amongst yourselves, but the Q&A line is where we really want to see questions posted. And with that, I will hand things over to the great folks from Barings and their team.
Great. Thank you so much, Bill, and the AEDC team for the invitation. We're excited to participate here and appreciate that overview. We'll try not to be too repetitive here, but obviously, first and foremost, we are very grateful for the opportunity to invest in the state on behalf of the Alaska Permanent Fund. We truly believe there are deals in the state that are, that represent some of the best investment opportunities in the nation. It is our ongoing, pleasure to see the Alaska portfolio coming together as we continue to execute on our objectives across the platform here. We do soundly believe that there are many attractive opportunities in the state that are primed for future growth. We do continue to source and execute on those objectives. But it really is our takeaway today, and I want to convey that we are committed to the success of the program here, and we are here as a long-term partner and a helping hand. So a quick agenda, we'll give, again, just a rehash of quick intros. I'll tell you a bit about Barings, the Alaska Future Fund. My colleague Pat again will give you a summary of the macro, and then Rick Van Nieuwenhuyse will chat about Alaska mining and Contango. So to start, again, I'm managing director here, investment committee member at Barings. I am and do have the distinct pleasure of being one of the portfolio managers for the Alaska Future Fund, alongside Mina Nazemi, who some of you have met. She sends her regards. She's on a long overdue vacation. So overall, I did start my career over 14 years ago at Credit Suisse. Have been in the private equity industry for over a dozen years, and within that have completed dozens of transactions in the private market over my career, and have helped manage private equity investments and portfolios, representing billions of dollars across corporates, pensions, sovereign investors, including programs like the Alaska Permanent Fund. Pat?
Hey, Alan, thank you very much. Good afternoon, everyone, or maybe good morning. Patrick O'Hara, Managing Director at Barings. I've spent about the last 23 years on the investment side, focused in two probably broad areas. The first would be investment management, sourcing, underwriting, and managing investments across private equity, real estate, natural resources, infrastructure, private credit, and along that, helping to develop and build out client relationships. My background, in addition to Barings, I've worked at firms like GE Capital back during the dot-com bubble and post that for 5 years. Spent time at Credit Suisse for a number of years and Deutsche Bank. So it's a pleasure to speak with you this morning, and look forward to talking about the macro.
Rick, did you want to give a bio, or did Bill cover?
I think Bill covered it pretty well. I'll wait till we get my slides up. How about that?
Absolutely, no problem. Okay, so Addie, next slide, please. So look, I'm going to give you a quick overview. I'm going to speak for about 10 minutes, tell you a bit about Barings, the funds and co-investment group, and more specifically about the Alaska in-state program, or what we call the Future Fund. Barings, Bill did cover this, is an investment firm now with an updated AUM number of over 380 billion of assets under management as of June 30th. We do have over 1,700 employees, so large firm, well established. We're actually a subsidiary of Mass Mutual Life Insurance, which provides us with a stable and flexible ownership structure that we, ultimately affords us to take a long-term approach to our investments and our business as we build. On the next slide, you'll see we do cover a lot of areas, from fixed income, public equities, private credit, real estate, and private equity, which is where we sit within the organization. At the bottom right, you'll see the funds and co-investment group there with 5 billion of assets under management. Double clicking on the next slide is the funds and co-investment group, which is where Pat and I are part of. Our platform consists of 18 investment professionals. We do have a long history of building customized private equity portfolios, investing in funds, co-investments, and direct secondary opportunities primarily here. Our track record in particular focuses on the lower mid-market and emerging manager space. We've had a great success there. And over the approximate 30-year track record of the firm, of the funds and co-investment group, we've deployed nearly $8 billion across over 500 investments. We have an extensive network of nearly 3,000 sponsor relationships. And typically, we look at nearly 1,000 deals a year, right? That includes fund investments and direct co-investments as well. But what that does is affords us a great market pulse as we, take an objective view and review all investment opportunities. We actually do rank and grade a lot of or most of our investment opportunities. As Bill mentioned, the Alaska Future Fund is managed by our team. It is part of the funds and co-investment mandate here. And again, we do leverage our relationships as we seek to execute on the Alaska Future Fund mandate. Moving on to the next slide, we're going to talk about the Alaska Future Fund. We've been at this since the fourth quarter of 2019. Again, we do have 100 of the $200 million program that we share with McKinley Capital. They have 100 and we have 100. It's been interesting to invest through the pandemic, to say the least. But it also has been it's also been really great to see the resilience and creativity in the region. It's shown through clearly through this period. We've grown to meet some really special folks in the state and have always had a warm welcome when we come up. So we do go up there quite frequently. So really do appreciate meeting with you folks and sharing ideas and investments. But overall, you know, the goals are simple here. First and foremost, we're going to invest within the state while generating market rate returns, investment returns for the Alaska permanent stakeholders. That is number one. So comparable returns across private equity, real assets. We've also, you know, we're also keen on growing the Alaska prominence within our network of funds. We always make sure to ask, you know, our managers across our mandates if they're seeing any deals in the region we can be helpful. We would love to evaluate and review. And it's also just as important when we get a deal that we think would fit one of our managers, that we keep them in mind and bring them along to bring additional capital and bulk into a transaction. We not only want to buy companies, we want to make them grow. We want to make them more valuable within the state and outside of the state. You know, we want our capital to really have a double impact here. We want to grow local community, you know, the local community by job creation, GDP improvement, and more importantly, long-term sustainable industry development to improve the economy. On the next slide, I'll talk a little bit about our target industries, which again, Bill hit on up front. We do look to invest in the real assets focused investment arena. What that means is natural resources, you know, metals and mining, oil, gas, fisheries. On the transportation side, that'd be shipping, aviation, logistics. Infrastructure, we will look at highways, airports, midstream pipelines, ports, telecom, and alternative power. This is not an exhaustive list. We will look at other opportunistic areas, but just want to give you a flavor of where we're spending our time at the moment. From a regional standpoint, this one's pretty straightforward. There needs to be, of course, a Alaska in-state angle, right? So the company either needs to be based in or have a strong presence in, or a bona fide path forward to initiate or expand its presence in the state of Alaska. On the next slide, give you a little bit of flavor on the size and stage of the companies that we're looking for. We're generally going to go for cash flow positive companies with over 10 million of equity value. We will also look at pre-revenue development projects in the real asset space specifically with an asset behind it. We will, you know, generally avoid permitting or binary risk though. What, you know, may be helpful is what we won't invest in is usually we very likely we will not invest in a tech startup or venture capital type of company. But from an investment size, there are no hard and fast rules here. We would like to invest at least $5 million of equity or structured equity per opportunity on behalf of the future fund. We do run a pretty conservative portfolio mix and would evaluate per opportunity the cap of each investment. But there is obviously some room going up from that $5 million range. Again, we do manage other client accounts that can potentially increase that check size depending on the mandates. And we will absolutely utilize our network of global investors that can lead and or bring additional scale, investment scale, which some of these projects require into investing within the state. From a structure standpoint, you know, we target market rate, again, real asset, private equity investment returns. That is the key driver of the program. And, you know, if you want to ballpark it, think a minimum of double-digit net returns plus. That's the start. So given the return expectations, you know, we will typically look to invest mostly or exclusively in equity or structured equity deals. We're not looking for, you know, investing in debt instruments that are single-digit in nature. That's just not part of the mandate. And we also want to be, you know, partners and catalysts for growth. And as equity holders, we're aligned, right? We're aligned with the ownership and with the grand plan of making an exit that is fruitful for everybody across the cap structure. We do make investments into companies as either co-lead or co-investors, which means there has to be a partner alongside us at certain instances. We do make investments as limited partners into private equity and real asset fund managers as well. What that means is that then they will make direct investments within their stated strategy. In this case, they have to be, you know, based in or have a strong nexus to Alaska. On the next slide, you'll see some frequently asked questions. Won't delve in too much, but you know, can we lead and invest alone in transactions? Not typically, but we do have experience co-leading. We do want to see a strong syndicate of institutional quality folks in the investment equity stack. But we can also, you know, provide limited partner commitments as stated. We do not, you know, only care about making, you know, investments. We do want to add value to the regions long term. We do want to bring recognition to the state and provide a wide range of investors to come and look at opportunities within the state that maybe have been otherwise not looked at too deeply. We want our capital again to have a double impact and grow, you know, GDP and sustainable economic development within the region. So, you know, I think the next slide, we'll talk a little bit about the deployment activity that we've had to date. You know, we've been very active. We've had a lot of calling efforts, meetings, roadshows. Most recently, we were, you know, the team was up there in June, have reviewed many opportunities since the start date, you know, since late 2019. And actually, Barings had prior experience investing in the state prior to launching the Alaska Future Fund. We had a couple investments up there. And so have had some experience in the region. But overall, on average, we will typically have 10 to 20 active investment opportunities at different stages of diligence. So some are, you know, some can be extended processes that take months, you know, to develop, but we do like to be engaged early in opportunities. Some are, you know, very early in their review stage. Some are very, you know, close to a commitment. But what this has done on a capital deployment standpoint is, you know, we've maintained a very disciplined approach. We have committed to less than 5% of all the deals we've seen. Doesn't mean, you know, that those that are active will get done or won't get done. There's just been a relatively high bar. But even in light of that, we have deployed about a third of the program to date, as of 6/30. And we do have several investments in the late stages of diligence, which should prop that number up as well in short order here. And you see on the top right of the slide, you know, the pipeline. I'll give you a little bit of flavor of what we're seeing. It's mostly around the lower mid-market, which we define as under 250 million of enterprise value. You'll see that, you know, about 20% of the deals are more of scale, 250 plus $million of enterprise value. The deals in the pipeline do span our targeted areas of infrastructure, natural resources, transportation, and real asset service-oriented companies. Overall, you know, we feel good about deployment. We feel great about the portfolio. And, you know, we hope this gives you a good overview of Barings, who we are, the Alaska Future Fund. But as Bill said, we'll hold for questions till the end. But now I will hand it over to Pat, who's going to give us a little bit of a macro overview on how we think our Alaska program objectives fit into the current market environment.
Alan, thank you very much. Good morning again, everyone. We've got 6 slides we're going to walk through in the next 10 minutes or so. They contain 7 charts and tables. And, you know, my goal was to do a couple things. Number one, highlight the current macroeconomic environment that we're in today, provide a little bit of historical context, and hopefully during the talk, add a little bit of insight into maybe where we're going from an economic perspective, and with an overtone of, you know, how do we think about Alaska and where do we see potential opportunities today or maybe coming down the pipeline. You know, in contangent with this, we're also going to talk about gold in particular. Rick is up next from Contango ORE, and we'll kind of tie a little bit into what's going on in the macro environment, to what has been going on in gold for the last 100 years, to what it's been doing today, and we'll start to connect some dots for you. And then lastly, we're going to talk a little bit about, you know, the debt situation in the U.S. and globally, unfunded liabilities, and then tie it into why we think overall natural resources in particular is going to be a very good place to be in the upcoming decade. So with that being said, this slide that you have in front of you, slide 13, if you look at the top left, this is basically highlighting the top 6 central banks and their asset purchase programs over, you know, we'll call since 2002. And as you can see, prior to the great financial crisis, it was pretty, you know, we'll call it more or less flat. There was very little purchases going on. And then we had the great financial crisis in which the 6 banks basically acquired $2 trillion in assets. And as you can see, prior to the COVID, it's been up and down, but there's been a steady acquisition, about $2 to $3 trillion every several years of these banks buying assets, predominantly government debt, particularly in Europe and Japan. But as you know from our own central bank, also buying mortgage-backed securities and other assets. And then you can see post-COVID what happened. These 6 central banks basically printed $10 billion, which is almost 4 times what they did in the great financial crisis, to basically help bail out the global economy and restart and re-kick the economy. And if you go to the upper right-hand page, we look at the OECD, M3, and CPI indexes going back from 1981. And you can see M3, which is basically a form of a money supply, has been steadily decelerating since the high inflation eras of the 1970s, along with CPI going down to the point where it hit almost zero pre-COVID. And then all the money printing, the government borrowing, the deficit spending, you see a spike, which we all see every day now, of that high gold line shooting up today to what was witnessed in a high inflationary environment. The question is, and the Fed talks about it only being transitory, but unfortunately they don't quite define transitory. So we'll see how steady that is, or is there some actually legs to that inflation. On the lower left-hand side, forget the time period. The time period is from 2000 today, and it basically just shows the U.S. CPI on what it's done. As you can saw back in the great financial crisis, it was up around 6%, and then we had the stock market and housing market collapse, and then we basically went into a deflationary period for a brief period in 2009, which is highly unusual. And since then, it's been around 2 to 4%, depending on how you want to measure it. It hit zero before COVID, and then now it's starting to spike up, just like it is globally. It's spiking up in the United States. The U.S. government says it's about 5% today. There are third-party analysts who think that number is materially higher. But I think we all certainly can see it in energy and food and real estate and the assets that definitely has been in inflation and pricing. On the lower right-hand side, we show a chart going back 100 years, and it looks at the first half of each of those 100 years. And you can see what's happened with commodity prices. This is the broad index of commodities, and it's basically had its 5th best year in the last 100 years in the first half of 2021. And we saw what happened with oil going down at a spot market to a negative number. Now it's up today around 65 to 70. We saw copper go down to around $2 a pound, up to almost $5. We've seen it with gold and silver, and we've seen it with other commodities too, in addition to many foods. So you have seen the policy response of the central banks, the governments, the federal governments of the world, along with, the restarting of the economies, in that there has been a strong demand for commodities. Go to the next slide, Addie, if you don't mind. This next slide, we kind of just want to give you a little snapshot again of what's going on the overall asset markets and asset valuations and key market indicators that we kind of look at. If you look at the top left, you've got global stock market capitalizations, which were about $90 trillion pre-COVID, and then you saw that collapse of around 35% in the US and globally, where market capitalizations fell down to about 60 trillion. Then we had the policy responses that we've been talking about. And then you've had prices skyrocket, basically almost 83% since March of 2020. So a massive, not just rebound, but an expansion of the overall value of stocks globally. If you move to the top right, I'm sure a lot of you are familiar with this. This is called the Buffett indicator. And what it's looking at is the U.S. market capitalization for stocks divided by the U.S. GDP. And what this shows over the last 50 years is a steady increase in stock market valuations to GDP. The 50-year average is somewhere around 60%. You saw in the dot-com bubble days, we hit about 120. Today, we're at almost 235%. So, it's one measure of market valuation, and this by itself would indicate the markets are frothy. We'll show some other indicators that probably support that. We have definitely high valuations. And so as an investor, you just got to be careful where you deploy capital and the risk you're willing to take. On the bottom left one is the ratio of financial assets of households to disposable income. Again, roughly over the last 50 years or so. And you can see, just like stocks, a steady increase of financial asset values to income. And we might have been at 350%, in the early 1980s. And each of the major cycles, from the dot-com bubble to the housing bubble to where we are today, those valuations, though, that ratio continues to expand somewhere in the north of 600% today. So again, just another indicator of, we have to be careful on entry points on valuations. And if you look at the lower right, this is the Goldman Sachs Commodity Index to the S&P 500 ratio going back the last 50 years. And you can basically see the spikes up and down of when commodity prices did spike 3 times in the last 50 years. And they've also been down significantly 3 times in the last 50 years, with right now, even after the recent run-up, commodity prices to stocks are basically at 50-year lows. So when we think about Alaska and we think about the opportunities across the natural resource space, we kind of look at these valuations as just one data point to kind of help us get comfortable on a relative valuation of where other assets beyond natural resources might be selling in the marketplace. So we can go to the next slide, please. This one is just looking at the price of gold, going back basically from 1913 to last year. And just a couple key takeaways from this. The Federal Reserve was founded in December of 1913. At that time, gold was roughly $20 an ounce. And then, we fast forward to 1971, August 15th, and that will be 50 years this Sunday, the anniversary of when Nixon closed the gold window for the United States with our foreign counterparts. Gold was roughly at $72 an ounce. And then we had the inflationary period of the 1970s, seeing gold go up to almost $850 an ounce. And then we had the retraction as we had more, disinflation during the 80s and the 90s. And then we've had, financial crises in Europe, in Asia, in the United States, beginning in the late 90s, rolling throughout the last 20 years. And gold has, fairly done very well responding to that, of going up to offset some of the risks that we've seen and a lot of the money printing that's going on globally. So just the kind of long-term trend chart for gold. If you're a long-term investor, you've done well. Next up is a key indicator we look at for relative value, and it could be commodities in general, which we just showed you 2 slides ago, but this one is more specific related to gold, and it's the Dow Jones Industrial Average to gold ratio going back from 1915 today. And what you notice here, there's on the top, there's basically 4, we'll call it 3 periods of time where the ratio of the Dow Jones Industrial Average to gold have exceeded 19x. So each of those times have been notably a market top, going back to the, the stock market 1929 peak, to the peak in the late 60s, to the dot-com bubble, and to the housing bubble, and where we are today. And if you look at prices today, the Dow Jones compared to gold is back up near that level, where if you're a gold investor, all things being equal, this is not a bad entry point. But if you see below here, we've got the downside of stocks to gold, and you can see what's happened in the past significantly, after the Great Depression during 1933, and then the late collapse in the 1970s of the U.S. dollar. You can see that stocks went down, during the Great Depression to under about 2 times the price of gold. In the late 70s, it was a 1-to-1 ratio. And during the great financial crisis, we got down more, probably like to a 7-to-1 ratio. So it shows you the variability, the volatility of stocks in general versus gold, and the long-term trends going back, and where are you in the long-term cycle. So we'll go next. This next chart takes us a little more short-term. It takes us since the beginning of the 21st century. And what we have here is we have the top 9 global currencies, how they've traded every single year on average versus the price of gold priced in their currency. And there's a couple things that really stand out here if you kind of just take a look at it. There's not a lot of red and there's a lot of green. And if you look at the first one is the US dollar, over the last 20 years, of these 21 years that are listed here, gold has been up 17 of the 21 years, which is pretty amazing. If you ask the average investor what that statistic would be, they probably have no idea. But what's even more impressive to us is that long-term average of that 10.3. The 10.3 is a compounded basis. So for the last 20 years, on average, gold has been going up 10.3% a year versus the US dollar. When you think about what you have in your checking account today, your savings account, what the 10-year, 30-year treasury is paying, if this can be duplicated, this will be quite a performance going forward. And then lastly, again, these are the major currencies in the world. On average, gold has been going up over 10% a year for the last 20 plus years against the major currencies in the world. Another way to say this, for most people, their purchasing power of their currency has been declining 10% a year for the last 20 years. And we can go back longer term. Obviously, it's much higher than that when you just compound it. So we'll go to the next slide. This last one is kind of tying in some of the things that we see today. The top table, it looks at the U.S. federal debt to U.S. GDP, and the debt to GDP ratio. If you go back to post-World War II, we were at 118% of debt to GDP. We worked our way down through a combination of organic growth, money printing, to get down to 34% before Nixon closed the gold window in '71. And since then, we've been on a steady rate, basically increasing our debt, doubling it every 10 years on average, up to the point now where the end of 2020, we're above where we were in World War II. We're the highest we've ever been. Today, it's around 130 or so. And then when you look a little bit of statistics down below, the 1971 to 2020, the era after the gold window closed, you know, the U.S. debt is up $27 trillion. The debt has increased 64x, and it's been growing at almost 9% a year for 50 years. And then now you look at the tables below, we got government statistics on U.S. federal debt only, and we have unfunded liabilities estimated by various sources. And you can see these numbers are dramatic. We're, you know, all in, you know, $28 billion, maybe 30 today, trillion, sorry, on U.S. federal debt. Unfunded liabilities, they vary anywhere from 50 to 150 trillion, depending on who you're looking at and who's doing the calculations. But the total federal liabilities are high. They're 78 to almost $175 trillion. And it's really those debt to GDP numbers that get our attention. They're alarming. And when you add the unfunded liabilities, which are a bulk of it are coming due over the next 20 years to baby boomers, when we look at natural resources, things that you cannot print, things that have to be mined, processed, and developed, we like that kind of a backdrop to where the state of Alaska, through its rich natural resources, its citizens, for both employment and the pension fund, should have significant opportunities going forward. As you know, we view natural resources supply is fixed. It's not growing. In some cases, it's shrinking. The money supply is going to be growing dramatically. So the purchasing power will hold up well, we think, with natural resources and return some nice, good adjusted returns. So Alan, that's it for that one. And Rick, I think you're up next.
Well, thank you, Pat. And that's a great review of the gold business. It's a pleasure to be back talking with the Anchorage Economic Development Corporation. Go ahead and advance the slides. I'll be making some forward-looking statements, of course, and some cautionary language around my reference to resources and non-GAAP measures. So here's a snapshot of the mining and minerals industry in Alaska. There's 6 large mines, there's 6 advanced stage development projects, there's 50 active exploration projects spending over $500,000 this year. Over 150 active placer miners that collectively produce around 50,000 ounces of gold in 2020, and they'll probably do as much or maybe a little bit more this year, along with a number of sand and gravel operators that provide construction materials for construction and for road projects. And the next slide shows just the large-scale mines. Red Dog, one of the largest zinc mines in the world. Usa Belly Coal provides coal to 6 power plants in Alaska. Fort Knox, Pogo, and Kensington, they collectively make Alaska the 2nd largest gold producing state in the United States. And of course, Greens Creek is the largest silver producer in the United States. So good attributes in our developed mines. The next slide shows the the development stage projects, the 6 development stage projects. I'll start with one of my favorite, Donlin, the 40 million ounce gold deposit, joint venture between Barrick and Nova Gold. Currently doing state permitting. They received their federal permits, so that project's advancing well. The Ambler Metals, the joint venture between Trilogy and Sal 32 is completing a feasibility study on Arctic this year. That's a copper, lead, zinc deposit in the Ambler Mining District. Lots of other exploration going on there between the joint venture partners and another private company called Valhalla. And then our Mancho deposit, it's a million ounce deposit. It's on Tetlin lands, and I'll speak more specifically about this a little bit later. Of course, the Pebble copper, lead, zinc, gold, silver deposit, or sorry, copper, molybdenum deposit, huge but controversial. Graphite One's world-class deposit up on the Seward Peninsula. That's a world-class graphite deposit. They're completing a pre-feasibility study this year. And the Livengood gold deposit, located north of Fairbanks here, 10 million ounce plus gold deposit. Low grade, and it really struggles because there's no power there. And so that's a real challenge, challenging project because of the low grade and the lack of power. The next slide focuses on the 50 exploration stage projects that are active this year. Searching for copper, lead, zinc, gold, silver, tin, graphite, rare earths. Collectively, they're projected to spend about $160 million this year. And if you look at the next slide shows who's spending the money. And this is an interesting slide. It's mostly, $97 million roughly spent by Canadian investors, 37 by Australian investors, 13 by US, and 9 by Japanese. Obviously, with the investment from the Alaska Future Fund and Barings, we're hoping to see that number increase, and we'd certainly like to see more U.S. investment in Alaska. So, but this is a very telling slide. The next slide, again, just sort of summarizes the mineral activity in the state. 10,000 jobs, direct and through contractors. Around 90 communities in Alaska are supported by mining and exploration. Average salary is over $100,000 a year. That's a salary you can raise a family on. There's about $600 million being expended on exploration and development. These are statistics for 2020, and again, the U.S., Canada, Australia, and Japan are the main investment groups. About 1.9 billion in export value from the producing mines. That represents about 38% of Alaska exports. And I think a high note on when we had going through the pandemic, the mining industry had strict protocols to protect workers and communities, and was certainly one of the bright spots in the Alaska economy for 2020, and I think probably for 2021 as well. Next slide. So switching gears and focusing on Mancho, our gold deposit. So this is a deposit that Contango found through exploration efforts. 1.3 million ounces of gold in the measured and indicated category, averaging about 4 grams. That's pretty high grade for an open pit mining scenario. It's located just off the Alaska Highway on lands owned by the Tetlin Alaska Native Tribe. We formed a business partnership with Kinross because they have an underutilized mill at Fort Knox, and we saw the opportunity to be able to develop our project for lower capital, a smaller environmental footprint, and therefore lower execution risk. So the next slide shows just a little bit more information about who Contango is. We're a US company. We're currently trading on the over-the-counter. We're pursuing an uplisting to the New York Stock Exchange American, which we hope to have finished by the end of the year. We've got $36 million in cash. We're well funded. And of course, there was a recent strategic funding by the Alaska Future Fund, which we're very, very pleased with, and of course, why we're here talking with them. The next slide So we've had this project for 10 years. It took a lot of effort to define the resource, and to define or to build the infrastructure to support the project. But also I want to point out the importance of the relationship with the Tlingit Tribe, and this is something you develop over a long period of time. And I'm very pleased that Kinross is continuing that strong working relationship. The next slide just shows you the deposit itself. It's located on top of a hill in what's called the Tlingit Hills. In September last year, we formed a 70-30 joint venture with Kinross, and with Kinross being the operator, and our former partner Royal Gold receiving a royalty, and along with the Tlingit Tribe, who will also receive royalty payments once the mine is in production. Again, the plan is to mine the ore here at the Mancho deposit, and then truck it up to the Fort Knox mill along the Richardson Highway. It's a very simple plan. Expected ounces, about 1 million ounces of gold equivalent over a 5-year period. And the gold equivalent here refers to gold and a little bit of silver. It's really mostly a gold deposit, but there's a little bit of silver as well. Our timeline and plan as projected is we're spending $19 million this year, joint venture money, so funded on a 70-30 basis, to complete studies and get the project ready for permitting. We would expect permitting to start at the end of the year, or before the end of the year. Next year, complete a feasibility study with early construction works potentially starting in 2022 in the summer, and continuing on to 2023 with ramp up of production in 2024. And of course, we'll continue to explore what's a very substantial land position on the Tlingit Reserve. Next slide gives you some anticipated economics. Originally, when we signed up the deal with Kinross, the release indicated that the capital cost would be about $110 million. And so I want to highlight here that we're seeing in action exactly what Pat was talking about. We do have inflationary pressures. The Fed calls them transitory. I'm not convinced, and certainly I'm not going to rely on them being transitory. We're seeing our capital costs now projected to be between $105 and $130 million on a go-forward basis. So it's higher, no question about it. And that's based on a recent internal scoping study completed by Kinross. Expected on an average basis to produce about 220,000 ounces of gold equivalent per year. Our 30% would represent roughly 66,000 ounces of gold. We're going to use an elevated cutoff grade, so the gold equivalent cutoff grade is, or average grade is about 6 grams, which is again very high for an open pit mine. Now we're also seeing and expecting our operating costs to go, but we don't have any new guidance, and we won't really be able to update that until the feasibility study, which is planned for release in 2022. But again, we're seeing that relationship between inflationary pressures. The gold price originally, when the $110 million of capital was estimated, was that was used was a long-term gold price of $1,250, and now Kinross is using a long-term gold price of $1,500. So again, we see those two things working in tandem: inflation and an increase in gold price. Next slide. So along with having an economic project, there's 3 other things we need to do to have a successful mining operation, and that is keep our workers healthy and safe. And I'm proud to say that Mancho has a 0 LTIs this year. The next slide talks about hiring and training. This is something that Contango has done for the last 10 years, hiring locally. It's something I've done with all the projects that I've been associated with, and in Alaska, there be Nova Gold or Trilogy. It's certainly a part of our core value, along with community meetings. Early on, it was a lot of meetings with Tlingit, but now with the plan to transport ore up to the Fairbanks Fort Knox mill, Kinross has now expanded that to talk with all the communities between Tok and Fox, along with important stakeholders like Tanana Chiefs, Doyon, the Alaska Chamber, and AMA. So again, very important to keep the community abreast of what's going on. So here's the project. It's just behind the bushes there on the hillside. It's about 10 miles from the highway as the crow flies, and then a 250-mile journey up to Fort Knox. The next slide shows the Fort Knox mill, which of course has been operating for 25 years. This really is the main reason why we wanted to have a partnership with Kinross, is this underutilized mill can process our ore and not have all the issues related to permitting a new facility, capitalizing a new facility, and executing on a new facility. This thing's been, as I said, it's been operating for 25 years. Next slide. As I mentioned, Contango has been out here for 10 years, so the project was well set up for Kinross to come in and execute on. This year, next slide, shows our plan, which is, we're about halfway through the year, and a $19 million budget that upgrades resources into measured indicated. This is in preparation for the feasibility study, condemnation drillings for placement of facilities, metallurgy, hydrology, geotechnical for pit slope stability, for placement of our facilities itself, and a whole raft of engineering and environmental studies that will support the feasibility, permitting, and community relations efforts. And of course, ongoing exploration. Next slide. At site, it's a very, very simple plan. There's 2 open pits, relatively small, with the development rock and waste rock materials deposited immediately adjacent to the open pits. No mill, no tailings facility. Again, feasibility is expected next year, and permitting we expect to be underway by the end of this year. We're targeting early construction to start in the summer of 2022 and be completed by the end of 2023, with ramp up and full production in 2024. So very, very, very aggressive plan. Next slide. So while Kinross is busy as the operator executing this plan, getting us to production over the next 2-3 years, ourselves, Contango, will be working on our own projects. And I'll just give you a brief outline of those in the next slide. This is the Tina Gold Belt, very highly productive gold belt in Alaska, over 100 million ounces of endowment currently. We have our Shamrock Project, which is located just south of Fairbanks, between Fairbanks and Delta Junction, and then next slide shows our 100% owned claims adjacent to the Tetlin lease, which is in the joint venture with Kinross. Highlighted in pink here are our Hona and Eagle blocks and our Triple Z blocks. We're doing exploration work on both of those areas this summer, both at Shamrock and at Hona Triple Z. So we'll look forward to updating you on our progress there as those results come in. And of course, we're always looking at new opportunities, and we'll hope to update you on those as well in the coming months. So just a wrap-up slide here. Developing Alaska's next gold mine in partnership with Kinross and the Tetlin Alaska Native Tribe, and I'll leave it at that.
Thank you, Rick and Pat. I'll just wrap up here. As you can tell, we're really excited about the prospects of our investments as it pertains to the Alaska Future Fund. You have a beautiful state with many opportunities, and we'll just keep doing our part to provide exposure, source capital, and most importantly, create strong investment returns for the Alaska permanent stakeholders. We look forward to seeing you all in person as the world here continues to heal from the pandemic. In the interim, please feel free to reach out if you have any questions or comments. Our emails are listed here. Addie will put that up shortly. We're here long-term as partners, and we'll always be willing to lend a helping hand. We'll take any call. We'll provide feedback, introductions, whatever we can to make things work. We look forward to working with you all. So thank you again, and we'll hand it back to Bill to moderate Q&A.
Alan, thank you. Thank you, Rick. Thank you, Patrick. Great presentations. Deeply appreciate everything that you've shared with us today. We'll go ahead and go into Q&A. I'm going to start with a couple of questions that I have, and then we'll turn to the audience questions. I want to remind folks online If you've got a question, just put it into the Q&A and I will get to it as time allows. So please think about your questions and get them posted as quickly as you can. So I'll start out with a kind of a general question for our good friends from Barings. And this is more of a kind of a preparatory question for potential investments that are seeking your interest. And the question is, before they talk with an investor, what questions should entrepreneurs or business owners ask themselves? This is more to help the would-be entrepreneur that might be online or considering an idea and bringing it forward to you. What should they be thinking about and asking themselves about before they come and reach out to you or any other potential investor?
Yeah, I think that's a great question. In general, you know, we love to hear from entrepreneurs and hearing their ambitions to creating something and value for the long-term investors here. But overall, it's, you know, what's the grand plan? How will the economic tailwinds support their investment thesis? And frankly, who are the right investors to support your project? And so, you know, you got to think of it from a long-term investor. Do you want debt capital? Do you want an equity partner? What value will these partners, these investors bring to you, whether it be strategic, if it's introductions, if it's access to specific areas, but then, you know, operationally, obviously wanting to know who's with them, with, you know, at their side to help manage through and make a successful investment in terms of the management team. So I think high level, those are kind of the key strategic areas that we would point folks towards. And, you know, obviously understanding the competitive landscape, substitutes, the whole Porter's 5 forces and so on and so forth. But generally speaking, we're happy to walk through and chat with folks on an early basis. Just because, again, our approval rate is what it is now, it doesn't mean that a deal is ultimately not going to get there. It just means that it hasn't gotten there, and we're happy to support as we can. Pat, anything else you would add?
Yeah, good response. Just one thing, you know, not every entrepreneur is meant to be, you know, a long-term business owner who grows the business. So I think when entrepreneurs do look at their own skill sets and their own interests and desires, you know, that they're honest with themselves of what their capabilities are and what they want to do with their life. Because they're starting a business, there's getting a business to a certain level of growth to profitability, and then there's expanding it beyond. And not every entrepreneur wants to or is great at all those aspects of growing a business. So they need to understand where they are and where their business is and how do they want to proceed going forward, because it does determine what kind of partner you're going to bring on board.
Okay, very good. Any other thoughts that anybody wants to add? Okay, next question. Are there minimum or maximum investment ranges Barings has when looking at opportunities in Alaska?
Yeah, I think that one, there's no hard and fast rule. There's generalities, but it will be specific to individual deal. So if we feel the risk return is more cyclical in nature, if there's more binary outcome potential, the size will be mitigated as appropriately. We would tend to tranche things in based on specific milestones. So we wouldn't look to put all the money in at once. Again, this is all subject to each and different types of investments, but on the wish list, it's, you know, we'd want to invest $5 million plus into the business. So that means that a business has to have some scale, not large, not huge, but there has to be some heft, some operational, you know, wherewithal there. And on the top end, you know, it's 10 million plus. Depends again on the situation and the tranching and the individual asset at hand.
Anybody else want to add to that, or does that pretty much cover it? Okay. My last question. Oh, I'm sorry. Go ahead, Patrick. I apologize.
Yeah, just to touch upon Alan, you know, when we think about this too, obviously the experience of the entrepreneur / business owner is critical. But also when we look at investments, we also look at the entire management team, you know, the senior leadership of it, if there is a senior leadership, on their depth and their experiences and how they've done through cycles, and the sort of board of directors that they might have built around them, or senior advisors, because, you know, obviously the more intelligent experienced people you have helping you, the more likely you to have good outcomes. So we look at the full package and not just the we'll call it the CEO.
Okay. All right. This one is my last question, and this is for all three panelists. So please, whoever wants to jump in on this one. As Alaskans, we tend to think of ourselves and our state as unique. But what areas of the world would we as Alaskans benefit from in looking at in terms of strategies and developing key partnerships? Any thoughts on this one?
Bill, I'll go ahead and jump in. A fascinating question. I've always, I grew up here and I'm in Fairbanks. I live in Fairbanks now. Grew up in Anchorage, but I've always felt that Norway is a great example of a jurisdiction that has done well with its endowment. And when you speak to things, obviously we've got oil, so we've got oil. There's the connection there. But I think beyond that, one of the things that I think we really struggle with here in Alaska is power, cheap power. We don't have cheap power. Norway has a huge grid of green, cheap power, hydropower, and that has been developed over a long period of time. And we have a little bit, but we don't have. We have small little hydro plants here and there, but we don't have a big project that can allow us to produce 3 to 5 cent power, and that's something that's really missing. And so I think Norway is a great example of a country that has a great natural resource endowment and has done great things with it for their society.
Yeah, Pat, and I would just jump in. I agree with Rick, and I would also look at maybe Australia with great resources, the ability to stabilize their economy greatly with a lot of the exports that they have, and having the U.S. and the lower 48 as an offtake here ability is a great ability to funnel many of the great resources we need and have domestically, right? So it provides an ability to become more independent as a sovereign nation, and we should just look in our own backyards here to make sure that we're exploring and investing within the state. As Rick pointed out, it's really baffling that the capital coming into the mining industry is foreign. And so, we really have to do a lot. We're trying our best. We're doing what we can to provide, Rick and Contango, for example, a platform to even attract more institutional investors from the lower 48, from the entire nation. But at the end of the day, we do think there is a compelling comparison here. So not sure if I stole Pat's thunder, because I think he would agree with most of that.
No, Alan, listen, I have a personal view that we're going to have a very strong natural resource boom over the next several decades. When we look at ourselves and we look at Europe, we're kind of stagnant on population growth. Organic real growth has not been all that high. But when you look at the emerging markets and where demand's going to come for, natural resource related items, you think of Africa, you think of Southeast Asia, you think of areas that their population, India, these areas that are going to be leading the world in the decades ahead on growth, where Europe and Australia and Japan and US were in the past. These countries are going to be moving up rapidly, and they're going to demand and want things related that need to be built and that are going to require commodities. And those countries that are blessed with natural resources and can set up a political and business environment that's friendly but necessarily safe with the environment, I think those are the ones that are going to come out ahead. And Alaska is positioned to take advantage of that, if they continue to conduct, themselves in a very, pro-business but pro-climate satisfactory environment.
Okay, we're just about out of time here. I'm going to call for getting this last question in. This is from Laura Cameron, and Alan, I believe this is pointed at you. It was posed while you were giving your presentation. It notes 10 to 20 opportunities specific to Alaska or total for Barings.
Yeah, so the answer is, in short, 10 to 20 opportunities for the Alaska Future Fund program active at any given time on average. That can swing, but we've looked at 100 plus, well over 100 actually deals overall. There's some that again take longer to come to fruition or to diligence as we're digging in with alongside management teams and sponsors. So it is consider it 10 plus on average deals that are active and engaged with the team here at the Alaska Future Fund level.
Okay, excellent. Well, gentlemen, thank you so much for your time today and for these great presentations. Amazingly in-depth, amazingly informative. I learned a lot about a mining project that I quite frankly wasn't even on my radar. So Rick, thank you for that. Very excited for your project. Alan and Patrick, thank you so much for the work that you are doing and for sharing what you are seeing in global markets, trends that could have profound effects on Alaska's economy in the coming decades. We wish you all the greatest success in finding great investments in the state to deploy not only the Alaska Fund, but also the other funds that your company manages from around the world that we hope more of will come to our state in the coming years and decades. For everybody who joined us today, thank you so much. We deeply appreciate you being here with us today. Our thanks again to Alaska Executive Search and Bradison Management Group for their generous sponsorship of this program. I think we learned a lot today, and we look forward to learning more next month at the next AEDC Voice. So with that, thank you all, and we will see you again in the future.
Thank you.
Thank you, Bill.